Let's be honest, taxes in Nepal can feel, well, pretty complicated. But what if I told you we could break down the essentials from your very first paycheck all the way to running your own business? Let's dive right in. And I promise, we are not going to hit you with a bunch of complex jargon or make you dig through endless rulebooks. Nope. This is just a clear, super straightforward look at how taxes are structured and collected in Nepal. And the best part? We'll get through it all in about the time it takes to drink your morning tea. All right, so to really get a grip on the whole system, we've got to start at the very beginning, square one. Before we jump into all the different kinds of taxes, let's ask the most fundamental question of all. What exactly is a tax, anyway? Now, this is a pretty classic definition, but I love how it frames the idea. A tax isn't just some payment you have to make. It's a shared contribution. It's the money we all chip in together for the stuff that benefits everyone. You know, things like roads, schools, security, the works. And that's why taxes are compulsory. It's not optional. And hey, it's not just about the main tax amount either. The law also includes things like fines and penalties if you don't comply. It's basically the system's way of making sure everybody is contributing their fair share. So when you boil it all down, taxes in Nepal basically fall into two big buckets. First, you've got your direct taxes. Think of income tax. It's simple. You earn the money, you pay the tax directly. The burden is all on you. Then, on the other side, you have indirect taxes. This is where it gets interesting, because the burden can be shifted. A shopkeeper, for example, pays something called VAT, but they build that cost right into the price of what they're selling. So when you buy it, you end up paying that tax, just indirectly. Okay, so we've got the two main types down. Now let's see how this stuff actually works in the real world. We'll start with the one most of us are familiar with, individual income tax. To make this all a bit more real, let's introduce someone. Let's meet Asha. She's a professional with a steady salary, and just like millions of other folks in Nepal, that's where her main income comes from. And for the tax folks, this is exactly where her story begins. So how does the government actually tax her income? Well, Nepal has what's called a progressive system. It sounds complicated, but the idea is simple. The more you earn, the higher the tax rate gets, but only on the next chunk of your income. So look here, her first 500,000 rupees are barely touched, just a 1% tax. But the next 200,000, that gets taxed at 10%. And it keeps going up. It's all designed so that people who earn more contribute a bigger slice of the pie. But life isn't static, right? People's careers change. So what happens when someone like Asha decides to take that huge leap from being an employee to becoming an entrepreneur? Well, that's when the tax picture starts to get a little more interesting. And just like that, Asha is her own boss. She's an entrepreneur. Now, this is a really big deal tax-wise because her income isn't just a simple salary anymore. She now has what the government calls income from business. And believe me, the rules for figuring that out are a whole different ballgame. I know. Calculating business tax sounds super intimidating, but honestly, it breaks down into three pretty simple steps. Step one, add up every single rupee the business brings in. That's your total receipts. Step two, subtract all the legitimate costs of running the business. We call these allowable deductions. And boom, step three, whatever is left over is your taxable income. That's the number that actually gets taxed. So you're probably asking, what exactly counts as a deduction? Well, it's pretty much the cost of doing business. We're talking about the cost of products she sells, money she spends on repairs, any research and development, even an allowance for the natural wear and tear on her equipment, which has a fancy name, depreciation. The whole reason the government allows this is so that she gets taxed on her actual profit, not just all the money that came in the door. Okay, so we've talked about income from a job and income from a business, but believe it or not, that's not the whole story, not even close. So let's zoom out a bit and look at the bigger picture. Exactly. Income is just one piece of the puzzle. There are a couple of other huge taxes out there that affect pretty much every single business, Asha's included. Let's check them out. So, let's break these two down. First up, VAT. The key thing to remember here is that this is a tax on stuff happening inside Nepal. Every time value is added to a product or service along the way, a little bit of tax is collected. Now, customs duty is all about the border. This tax only kicks in when goods are physically crossing into or out of Nepal. And that rate, for most things you buy in Nepal, it's a standard 13%. That's a super important number, and you'll see it pop up on receipts for pretty much everything, from your morning cup of chai to a brand new phone. All right, so understanding the different types of taxes is one thing. But how does all of this actually work in practice? Well, it really boils down to two things: timing and playing by the rules. So, this is basically the tax year in a nutshell. It's a cycle, really. A business owner like Asha can't just wait till the end of the year. She has to pay estimated taxes in chunks or installments throughout the year. Then the fiscal year officially ends around mid-July. After that, she's got until the next year to pull everything together and file her final official tax return. And let's be really clear about this. This whole cycle isn't optional, it's mandatory. The tax department is serious about getting timely and accurate info. So hitting those deadlines isn't just a nice suggestion, it's a legal requirement, and yeah, there are some very real consequences if you don't. And those consequences? They're not all the same. They get more serious depending on what you did wrong. So if you just file a little late, you might get a relatively small fee. No big deal. But if you underpay your taxes, that's more serious. And then there's intentional fraud. That's the worst case scenario. We're talking penalties that can be as high as 100% of the tax you tried to avoid. Ouch. And there you have it, a whirlwind tour of Nepal's tax system. We saw how direct taxes on income and indirect taxes like VAT are the two main pillars. We followed Asha's journey from getting a paycheck to running her own business, and we saw why playing by the rules is so critical. So it kind of leaves you with this one big question, right? When you look at all these pieces, the income tax for millions of people, the profit tax from businesses, or that 13% VAT on almost everything we buy, which one do you think really drives the engine of Nepal's economy? Definitely something to think about. Thanks so much for joining us for this explainer.